And welcome to my morning report analysis videos on Wednesday 21st of March with me, Richard Perry, market analyst at Hantec Markets. It's Fed day. The Fed is going to be raising rates tonight. 25 basis points is the expectation. That has been massively priced in by the market. What has not been priced in the market is how the dot plots come out, how the inflation projections come out, and also how Jerome Powell comes across in his press conference. Now, what we have seen in front of the Fed meeting is the dollar, which has been picked up yesterday to sort of 2.5 week highs, arguably on the back of the euro weakness yesterday. You could suggest on the as well result of the ZEW disappointment. However, the dollar's given back a slight amount of that today. But look at these Treasury yields with the 10-year picking up, the 2-year at record highs and breaking out. So the 2-year certainly suggesting that higher rates is on the way, and could be also pointing towards a more hawkish view that the market is sort of considering that the Fed will take. Powell is sort of considered to be a bit of more of a hawk than Yellen, certainly, and how he comes across in his press conference today could drive a significant move in markets. Dot plots as well, if they get increased, then what would that do to Treasury yields, to the dollar, and to expectations of rate hikes going forward? So it would be potentially could be a really crucial meeting today. Also, was it due to risk appetite? Does it sort of hit risk appetite again, or does it sort of suggest that the Fed is more confident, and would that sort of benefit risk appetite? It's a difficult balancing act, and it all could come down to the inflation forecast. So the Fed today, markets are basically sort of consolidating on the equities. Little bit cautious across the European equities. Asian markets were also cautious overnight. Interesting that, as I said, that the dollar has given back, but it's given back across the board, and the other forex majors have not really taken any sort of a view, apart from the fact that the Aussie is slightly underperforming today. Sorry, outperforming today. Yeah, we've got some key moves that we're seeing in these markets now. I think that's going to happen tonight, where we see the big moves, and a lot of these markets are at crossroads. The gold price has just picked up a touch, but it's back towards that key level of support band between 1300 to 1310. Euro dollar picking up, but again, sort of around sort of key levels, and a lot of these markets are at key levels. So I wish you good luck in your trading on the Fed tonight. But my chart, before my chart of the day, here we go. We do have a lot of UK data coming out very shortly. We've got UK employment data expected to stay at 4.4%, but the wages is expected to tick up to 2.6% from 2.5% last time. Now that would start to suggest that we're going to be seeing a real wage increase in the UK. So that would be interesting. How does that affect the sterling? That could see sterling strengthening. You've also got US data throughout the day. Current account expected to deteriorate to 125 billion negative on the deficit. Existing home sales expected to tick mildly higher by 0.5%. And the weekly crude stocks, again, inventory build on the crude. Distillates, again, drawdown. Gasoline, drawdown. But the big focus will be on the Fed. Now, my chart of the day is the sterling Aussie, which we have seen sterling breaking out because we've seen positive news on Brexit recently, as the transition deal seems to be sort of close to being agreed, and that could be could come to fruition maybe today. But we've got the summit tomorrow, which the EU ministers are expected to all sign off on this transition deal, which has been sort of formulated in recent days. So you've seen sterling breaking out, and that breakout against the Aussie has come to the highest levels since Brexit, that Brexit-related sell-off that we saw. So we've got sterling Aussie at the highest since Brexit, and breaking out. And it's a really strong move, and you can see that on the momentum indicators. Sort of this multiple day breakout now. So you'd say that the candles are slightly sort of losing their magnitude to the upside, and yesterday's lower daily high below that 82.85 level suggests maybe a bit of a rolling over, but I think this is a near-term rolling over, and I think that any sort of unwinding move is now a chance to buy. And you'd look at this sort of breakout level, 79.05 to 79.95, or I suppose 79 figure to 80 figure, is probably where you'd see that range. In reality, so you've got that sort of breakout, those breakout levels which are now supportive. So any unwinding move back into that range, I think is a chance to buy. You've got the momentum indicators which are sort of, as I said, just sort of rolling over a touch near term, but I think generally speaking it's more of a consolidation than anything else. An hourly chart sort of again shows that consolidation, but if there is a slight sort of loss of support at 81.35, which was yesterday's low, that could sort of see us unwinding back towards 80 big figure, and I think that is where we start to see the buying interest coming back in. So we're looking positive on sterling Aussie now, looking decent, and I think little unwinding moves are a chance to buy. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.